Good morning. It is Saturday morning, the 31st of January, 2026. I'm going to take a look at the broader markets through HGSI. We get a little different perspective on the markets using this software, and I just want to share with you what I look at. So the market, as always, the market is your teacher. You don't need to delete your warehouse and chart views this weekend if you don't want to. It's not that big a deal because they are updated with the add-on if you do decide to delete them. But I don't believe I made any changes. I may have made some minor changes, so maybe it is a good idea. HGSI has been around for 25 years. It's stood the test of time. It's got a hardcore user base, and I'm going to get into it and talk about market analysis. Always remember, the market is your teacher. Now I want to get back to this disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation. I can't talk today. Recommendation to buy or sell. All trading strategies are used at your own risk. There are so many ways to look at the markets using this software. These are things that I've come up with just to give me a unique perspective, I should say, on the markets. And this is one group of scans I'm going to work with, and then I'll get into looking at some of the indexes here in a little bit. But in your files, I'm going to use the top-down category end-of-day relative strength to S&P sectors and the QQQ. And where I am now is I'm down here. Let me move this up so I can get to it. To the Market Inside ETFs. This gives a snapshot of what happened in the market with ETFs. There is MARAs in here. That's not an ETF, but everything else is. And I want to point out that you have to be in all securities for these to work. If you're somewhere else, they won't work because it's just the way I've set it up. The filters go directly to these ETFs or to these files. But you can see, as of Friday, the consumer staples sector crossed over. The zeros are there. It was up 1.7% for the day. This is, of course, a defensive sector. And money finally flowed back into the dollar. The energy sector has been strong for quite some time. The dollar did not cross over the 3 versus 6. You can see it's fallen so far, and we're starting to get some accumulation on it now. But let's just look at a few of these other things. The sector been strong. Look where the crossover was 23 days ago. Clear back here. And there were volume pocket pivot signals at the same time as buyers started coming in. There's this red volume spike down, but the close was up, just a little pullback, but the 3 stayed above the 6, and it's had a pretty good run. Now let me do something else. I'm going to click up here, and this is bringing up the ranking module, and I'm going to tile these. Now my warehouse is on the bottom, and the ranking module's on the top, and you can see that I have it set on percent change 1 week. So this is the daily. These are the daily results here. Here's the weekly results. Now the natural gas fund was up 20.97 this week. If I click on the warehouse, you'll see it goes directly to it. This is a UNG ETF. Volume high, spread high, wide, very high. This happened 9 days ago. Now I did a video when it was down in here, and I said it looks like this is under accumulation, and it certainly took off with this horrible weather that we're having across the country. Energy prices are spiking, but that would have been an excellent trade from right here even on the gap up with the effort to rise. It's moved up considerably since then, but I don't believe this gap had happened when I did that video, but it was certainly showing signs of accumulation. Now moving down here, here's the XOP. This crossed over 16 days ago. And let's see if we can find that. Let's see, this was a crossover right here on this effort to rise. And since then, it's had a pretty substantial run. Now I'm going up to the ranking module here again. Let's see, the U.S. Oil Fund. If I click through to the warehouse, you can see that it's number 9 here. It crossed over 16 days ago on the 3-6, and the VPOC crossed over 10 days ago. So here's the crossover. Here's the VPOC pullback 1 day right there, and then it settled down. The 3 held above the 6, and it took off, moving from around the $72 mark up to around 80. Now, what I like about doing it this way is we get a weekly look, a weekly perspective, and then we get a daily perspective down here because it's a percentage price change 1 day. Now, it was a rough day for silver. Bring that up. I mean, this was a climax run. You can see the opening gap down, and it continued to go down until it rallied late in the day. The first warnings were right here, an upthrust bar after a move. That's a sure sign of weakness. And then that was a buying opportunity supposedly for some people. Came up here, and then when the market opened, there was a huge gap down, and let's see, I just have an intraday chart here. Let's see if I can change to a daily chart, little different chart, but you can see looking over here that it gapped down minus 15.38%. The change for the day was 28.5%. Now, obviously, that's a devastating blow if you were a buyer here or anywhere in this area, because it wiped out gains going back to, well, let me put the crosshair on. Back to this area right here when it was trading for around $76. Got up to, it looks like, around 110. And that was enough to penetrate the 3 going down through the 6. You can see it right here, and also on the histogram. Not only did silver get hit, the mining spider, let's see, gold. Similar, buyers clear up in the $509 range up here. Where did it close? Down $50, or down 10.3% for the day on extremely heavy volume. Now there were warning signs here. Transfer of ownership and upthrust bar, that's a sign of weakness. There was a warning sign here. Upthrust, that triangle. And volume was extremely heavy. Let me go back to silver. I don't believe I looked at the volume on it. Yeah, extremely heavy volume here. Well, it'll be interesting to see what happens next week. if money flows back into those. But these stocks have had or ETFs have had a tremendous run. Now looking down here at the bottom, the SOXX, another ETF that's had a tremendous run, heavy volume. But notice on the days since the 3 crossing the 6, it's still positive. This 20 days ago. So this is going to have to cross. The green is going to have to come down through the red, and you'll see it on the histogram here. Volume was heavy but not excessive. Well, if you want to see the actual percentages, these are 142.8%, 147, and 131% on the against compared to the 20, 50, and 90-day moving averages. Let's go back and look at SLV again, and you can see how excessive this volume was compared to these moving averages. Almost 600% compared to the 90-day moving average. Let's look at gold. And once again, very high percentage negative. I like to look at the relative strength compared to these ETFs. Just give me a snapshot of what's going on. But I generally do start, well, I'll look at this and then I'll come down here to the end of day relative strength compared to the sectors. I'm going to transfer this to the ranking module up here, and you can see consumer staples were up 1.7%. This is obviously defensive. Energy sector, with the turmoil that's going on, is up, and the technology sector was the weakest one. But going into the individual stocks, based upon the sectors, the XLP, all you have to do is go over here to the quick pick and locate XLP, and then it drops down into the sector showing you all of the stocks that are in this sector. Plus I put the SPY and the QQQ in here also. This way you can compare the stocks to those two ETFs. But on top, you'll see Conagra. 12 days ago, it went positive on both the 3-6 crossover and the VPOC. If I transfer these to the ranking module for the week, the percentage change 1 week, you can see Cisco, PepsiCo, Tyson are above Conagra, but this had the biggest gain for the day. Now I'll bring a chart up. And you can see that this stock, the 3 crossed the 6 back here, this would be a bottom fish, but since it's a defensive stock that actually generates revenue, it looks like the EPS change is all negative, but still, here's a big factor, 7.6% yield on the stock, and it became attractive to long-term holders. Right in here. Here was a selling, heavy selling with the volume pocket pivot negative, and then the next day it started gaining some momentum, and here is where the 3 crossed the 6, and it's been moving up since. I'm going to go up here and use the ranking module because this stock, Cisco, was up 10%. If I click on this, you can see that it's down here at number 36. Actually, down for the day, 0.3%, minus 0.3%. The chart, well, they're showing revenue and earnings growth. They have a 3.2% dividend. This stock has made quite a move. It just pulled, it's forming a flag, as you can see. Here's the flagpole, here's the flag. Big volume right here on this move up. Effort to rise. This stock looks like it wants to go higher. It's got resistance over here. If you look up here at this window, the cyan is the industry group. It's been going down a little bit, and the green is the performance versus the industry group. So it's outperforming the industry group. There are no perfect indicators. We all know that, but the 3 crossing the 6 is a good lead indicator, both up and down, and then when you combine it with the VPA flags, I think these are really good combination signals without a bunch of other indicators which only tend to confuse. But and then you add the volume pocket pivots in. Here's one right here at the very bottom, along with the VPA, and this stock, which had clearly been in a downtrend, along with this group. The group is the cyan, but then here when it bounced, it started outperforming, or performed along with the industry group. You can see it's a flat line here and here. And then at this point, the group started going up, and it was outperforming the group. And I don't know what the news was. It might have been earnings. Here's earnings here, and here's a dividend. But it certainly took off. Now, I could spend all day going through these, but I'm not going to do that. You can do this yourself. Just if you have my add-on, you can tile your windows like this and come in and compare the strength of the sectors to the individual stocks. And I'll take a quick look at the XLK, the technology sector, before I leave this. And you can see what is in the S&P sectors. Now, I haven't looked at Intel. I know it was on fire before the earnings came out. It's still up 3% for the week. Let's bring that chart up. You can obviously see the effect of earnings. Big gap down here, traded down, and then 3 days ago, buyers are stepping back into it. On these earnings gaps, there's absolutely no warning. You just have to, if you're long, you can either protect yourself with puts, or you can just write it out and hope it rallies back. Hope the stock rallies back like this. Now, let's take a look at Microsoft, which got hammered. But I want to point something out. I mean, look at where this is a weak stock going into earnings. Yeah, it had a rally coming up here, but if you look at these moving averages, they roll down. The 200 had been penetrated to the downside. The 3.6 was negative until right here, but the 618 and the 18 versus 50, these are all negative. So it was in a vulnerable position if the earnings weren't optimal. And that's exactly what happened. Will it come back? Well, hopefully so. But it was strong here and then kind of neutral in here. But at this point, started selling off. Couldn't gain any traction. And then with the anticipation going into earnings, they were going to be very good. They weren't, and this is the result. But the fan, which had been really strong up to this point, started breaking down here when these moving averages crossed over, and it was in a negative position. Okay, I want to get away from this, and I'm going to go into, we're going to take a look at major market. I'm going to use the market cap weighted indexes and click through to those. But I have to remove my filter. I'll hold down my shift key and remove the filter. And you can see they pop through then. And I'm going to go up to the ranking module also. But now I need to get away from these scans here, and I need to go into my HGSI generated indexes folder. Now looking at this, you can see the SOX index, and remember these are market cap weighted. It's still positive on the 3/6, down 2.6%, but when I click on the ranking module, you can see that the index was still up 1.05% for 1 week. You can see it's holding up quite well. But let's look at the broader market, the S&P 1500. I'll click through. And now I need to go to my other charts. I'll click on this. HGSI index charts. We'll just start here and open this up. Now the last few days have been brutal, but look at this, the A's and the E's. The E's are starting to go up. The A's actually were going up too, and we are still in accumulation B. Volume picked up, but the fan is still in place. This is just another version of that where you can see the actual inflow and outflow. Now here is the third chart, accumulation distribution. You can see Chaikin, which is a 21-day indicator, which really doesn't tell us that much, but we still are holding up. We're only, if you look down here, we're only off 4% from the 52-week high and up 43.5% from the 52-week low. Let's look at this. Here's the AD line on the S&P 1500. If you look over here, I've got a box. It tells you that the advancers were 671 and the decliners were 810, so pretty close here for 0.3 advancers divided by decliners. Minus 139 is the difference here. So looking at the broader market here, it really doesn't look that bad yet, but that doesn't mean it couldn't become bad. You can see these have slipped down below their moving averages, and here's the percentages above the 20, 30, 50, and 200-day moving averages, but it's not a really sharp breakdown like, say, over here. So I'm not all that negative on the market right now. Now, this is one of my charts with the buy-sell indicators. Yes, the force index 13 and 2 have turned negative along with the VPOC, but the volume has not been all that yes, it's been high, but it hasn't been all that negative as far as I require a 3 to 1 or a 5 to 1 to generate either up or down to generate these signals, and it just hasn't happened yet. That could all change on Monday, though. These are all the same. 6 and 7, they're just variations on this. This has the histogram. And look at the AD line on the S&P. It was climbing, peaked right there. It's been coming down. Here's a percent of the index that's above the 50-day moving average. And this chart breaks it out for you if you want to look at it. It's chart number 08. It tells you the percent advancing, declining, and so on. I don't need to go through all this, but there's a lot of information in here, and this information is all pulled out of the warehouse view. Okay, I'm back at the level of the major indexes updated weekly. Market cap, I'm at the S&P 1500. I'm going to change to the index group. Click these through to the ranking module. And you can look down here and see the big gainers for the week. But what I want to do here is I want to bring up the spectrum analyzer, and I'm in the sector. This is a breakdown of the S&P. Looks like these are indexes here, it looks like. We'll just ignore those. Or there may be a couple here that may need to be assigned to groups, but I'll just leave these in here. What I'm going to do here is go up here, make groups from slices. And I'm going to put the date on here, prepend, sectors, S&P 1500 sectors, and the date will be put on there. It's going to go into the user groups, and it's assigning these stocks to their sectors. I could go back and do what I did before to look at it. I'm just showing you some capabilities of the program. Now, if you look down here, S&P sectors, there they are. You can see that they're dated. And then I'll click through here. And then we'll put them in the ranking modules. So this way, I can see, and we're going to get similar results to what I showed you earlier, but the consumer staples are on top. The others are all down based upon the indexing, but it just gives a good snapshot of where the strength and weakness is just by using the spectrum analyzer and then making these groups. Remember, this is 1 day down here. This is a week up here. Energy, utilities, consumer staples. For the week, consumer staples are on top just like it was before. Here's energy. If I want to take it a step further, I just change to the index group and get this out of the way. And I can see where the strength was on Friday in the energy group. Now, Comstock for the week, only up 0.53%, but for the day, up 4.3%. Now, I need to get a different chart in here. Go into my most used. Just grab one. It's in a trading range, but on Friday, you can see there was pocket pivot volume, effort to rise, strength seen returning, but it's got to break out of here. But the fan is pretty much in place. It's squeezing together. So just one to watch. There was a clear downtrend here, then a burst to the upside, and then a pullback, but it held in here, and it looks like it may want to go again. Anyway, you can do all kinds of things with this if you want to take the time. That's it for this week. We'll see what happens next week. It could be a critical week in the market if it doesn't hold together. But as I pointed out, I just don't see a tremendous deterioration yet because there's money flowing into certain sectors: consumer staples, energy, communications, and so on. The tech sector is vulnerable, and of course, with all the craziness in the news, things that are going on in this country and worldwide, who knows? It's a high-risk market, let me put it that way, but it hasn't really broken down yet, in my opinion. Thanks for listening. Have a good weekend.